frequency KCAA 1050 AM and Express 106.5 FM.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show each and every week. We come to you via radio stations. You can see us on YouTube. We're on a bunch of different podcasts, and we have a terrific website. It's called themortgagevoice.com. If you go there, you can see and hear this particular show, a couple, 3, 4 more, plus all of the guests, or many of the guests on the show, appear there with their bio and picture. So if you need to hear them again, if you want to contact them, you can do so through that particular website. It's themortgagevoice.com. I am Jeff Barton, and this is The Mortgage Voice. Appreciate you all listening to what we do each and every week, which is bring to you information that you really can't get assembled anywhere else unless you listen to this particular show. So when you go to the site, when you go to YouTube, when you go to the radio stations and you want to hear archives of the show, click on join. Why? Because you will get alerts as to when we're doing the next live show, as well as being able to see this particular show and hear this show anytime you want. The perspective over months, over years, and certainly week to week will bring you up to speed on what is happening in the mortgage industry, and lots of things happen all the time. And let's get right to it. The 30-year fixed rate loan is 6.62%, 15 years at 6%. FHA is at 6.2%. The jumbo loan is at 5.95%. The 5-1 ARM is at 6.12%. The 2-year is at 4.1%. That's the yield on the 2-year. Now, there's a guy out there, he's called Mr. Bonds, and I can't remember, not Barry Bonds, but Mr. Bonds, meaning that he believes that the bond market is really the place to go in times like this. Security being what it is, you can get a certain return, even if it's less than what you're going to get whacked with inflation. Inflation being about 8.25% right now, 8.5% in that range. So if you get what this 2-year is at 4.1% on the Treasury yield, it's still a pretty good return. And depending on how you spend and what you do with your money, although we have seen inflation really cut across all sectors and all levels of economic activity. I mean, this is a very, what they call sticky. I hate the terms they come up with because they're supposed to be insider and you all get to use them, but really, what does it really mean? It means that stubbornly, the price of a certain thing won't go down. That's what they call as sticky. So, as gas prices fell for, 3 months in a row every day, we would see conciliatory or other prices within that same sphere of petrochemical products not fall, meaning that those products were sticky. So when you hear that, what it really means is that the price isn't falling, possibly the way it should, especially given what we're doing at the Fed. And so this 4.1% return on the 2-year yield, to me and to Mr. Bonds, is a pretty good yield. Anyway, the 10-year is at 3.7. There is a gap, obviously, and today, the gap, not today, because you'll be listening to this show a couple of days after we record, but during the week, this gap got up to over half a point, over 50 basis points. That's a big, big deal. Why? Because, as we all know, this particular indication indicates that in 2023, and I say 2023, probably second quarter, could be the end of the first quarter, just not quite sure, and I don't think anybody is, but that's my gut feel. It could be second quarter to third quarter. You're going to see a recession, mild or not mild, really depends on what happens in 3 or 4 different areas. Obviously, we have the war. Obviously, there's inflation, supply side. COVID certainly is affecting a lot of what's going on in China, even though those particular markets are loosening. When I say loosening, it means that the COVID restrictions they have had in place probably for the last 6 months, really killing the supply chain and the ease by which products get from A to B. My cohort engineer, producer for the show, was telling me about a friend of his who has had some supply side issues with his particular product coming out of China. And mostly it's about transportation costs, which is the other thing that we talk about when we talk about sticky prices, transportation costs. And by the way, did anybody out there see FedEx? FedEx is cutting offices, cutting people, shutting down offices rather, and cutting people. Why? Because they had a miserable either second quarter, I think it was second quarter, and on the call for the third quarter, which was in last week. I don't know. This is kind of old news. It's about 6 or 7 days old, but FedEx is not doing well. And so you're like, wow, FedEx isn't doing well in a climate whereby transportation is the number one issue, whether you're moving products or whether you're moving mail. It always becomes how you get from A to B with which to be able to, justify what you pricing out your product to being. So all those things being equal, yeah, it's a very, very interesting time in that particular business. I'm glad I'm not in the logistics business. Okay, a couple other things on the menu here. Fed raises the rates. Yes, it did. And that would be Wednesday of last week. Fed raised by 75 basis points. And the word over two, looking for the top. Oh, I see. Two other things going on. So the world over is raising the short-term interest rates that the central banks of those particular municipalities, countries, charge to their short-term borrowers. In the U.S., it's the Fed raising rates. And they say, by the way, that we're going to top out at 4.6%. We're currently about 3.5%. So we've got some tightening to go before we get out to that, probably another 50-point basis raises, unless we see absolutely no particular movement in inflation and that these numbers are now not only stubbornly priced into future products, that's the new bar. So everything from there on becomes that's the base level, meaning that the 5 to 8% inflation rate is going to be the way it is. Anyway, the Swiss raised by 75 basis points, Bank of England by 50 basis points, Bank of Canada, as we all know, 75 basis points last month. And many other countries around the world have done exactly the same. So the only country in the world, and we've talked about this many times, China, of course, has been trying to lessen its short-term borrowing and loosen the ability by which borrowers can borrow. This is about their housing issue, and this is about what's happening. And I've said, I think, and I'll give my QAnon conspiracy about why China is yet to lift their COVID restrictions. I think it's more about the housing problem than about COVID. Meaning that if you're keeping people home and quiet, that means they can't go out in the street and not pay their mortgage and complain and strike and carry signs and get attention. And Xi doesn't want any of that because he's got his plate full with all kinds of different things stemming from Taiwan to, as I said, COVID, and as I said, also the issue with the housing sector in China. Okay, will inflation moderate or fall dramatically? That is the question. So what we have to do is think about it from a homeowner's perspective and from somebody who wants a mortgage perspective. This is a show, after all, that talks about the consumer, you buyer, you seller. What are you going to do? How are you going to get that mortgage? How are you going to sell that property for the most that you can get? And the main thing right now is the inflation rate is really affecting everything. So if you've got mortgage rates that are also now over 6%, what did I say? 6.62%, we're almost at 7%. Those two things together are putting a chill on this particular real estate market. And this particular real estate market is running out of steam. Now, every month we see year over year still positive, but last month it was only 7%, 7.7% year over year increase. 3 months ago, it was 22%. So this shows you the decline. We also see that the inflation rate will moderate or will it fall dramatically? And as a result of that, what happens to the rate of unemployment and what happens to the people who will be unemployed come January? Because we all know December is the month that people get laid off, especially when there's a coming recession, especially when, if you want to clean up your year end, that's when you do it. New weekly unemployment claims, 213,000. Now that is still pretty low, and we will see by the end of Friday what the rest of the unemployment says. Now we're coming up on, let's see, what are we? About 8 to 10 days away from the end of the month, end of the quarter, and we'll we'll be very interested to see what exactly is happening with those particular numbers. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Really appreciate you listening to the show. That was the mortgage section, by the way, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show, for listening each and every week. We try to bring you some great guests as well as information that you can utilize almost immediately. Local areas that we go to around the country, as everyone knows, we're on a bunch of different stations in a bunch of different places. We also do a LinkedIn and a Facebook and a YouTube, and we're also on 9 different podcasts. So if you want to see what we're doing and how we're doing it, just click on any of that and you can find us. But bringing information to you is the primary focus of the show. And with us today is a new guest that hasn't been on the show yet, and I'm looking forward to talking to Wiley. It's Wiley Freeman. She's with Mogul Real Estate down in Temecula, and she joins us now. Wiley, how are you?
I'm wonderful. How are you?
I'm fine, thank you, and thank you for asking. Okay, $1 million question. How's real estate down in Temecula?
Hey, real estate's amazing as always. You got to love what you do, right?
Yes, you do. In this market, yes, you do.
Yep, you definitely do.
Tell me how the mortgage interest rates are affecting prices and traffic on your listings or through your open houses.
Okay, so as far as listings and open houses, I mean, generally I think that there's a sharp decline in the buyer confidence in the market right now.
Okay.
So there's a little bit less foot traffic. So I've just been trying to reach out to clients, and it's a point in the market where we need to educate people, right?
Yep.
To kind of, it's all about educating them, and so we can gain some of that confidence back. As far as, people are kind of just sitting back wondering what's going to happen, right?
Yeah, no, I agree with you 100%. And when you talk about education, what are you telling them? I mean, obviously somebody comes in and they, we need a house and I can't afford it. And what am I going to do? Because this is how emotional real estate is. So what are you educating them? Do you start the process early? What are you doing with that?
Well, so, I mean, it's different for each individual client, right?
Uh-huh.
And that's important. It's not one size fits all type of a situation. It's, what is important to your clients? Do they have to move, or can they sit in their home and be comfortable for a little while, and kind of, if they have a 2% interest rate right now, maybe they do want to sit in their home for a little while, unless they have dreams of moving somewhere, within the next few months, then that's absolutely what they should do.
Do you see a return of the AITD at all? Because the seller has this great mortgage and maybe they'll be able to pass that on through that type of land contract?
Yes, absolutely.
Okay.
And that's another good thing to educate people on as well.
Right. We've done plenty of those back in the day and probably in the future when, prices get out of whack, but there's still a terrific looking interest rate on the mortgage that the seller has. That becomes a way by which you can negotiate too. How do you approach, non-traditional ways to negotiate? Do you just come up with an idea and talk it over with your client, or how does that work for you?
Well, you kind of got to dig in and ask all the questions, make sure you are aware of every individual situation. Like if I have a VA buyer that has a great interest rate on their home,
right.
Well, that, may be assumable by the new buyer and things like that, of that nature. Yeah, no, I agree with that. Yeah. No, please, I interrupt you. Just try to dig into every situation and make sure that we are, informing people on every option that is available to them. Do you see market conditions changing? How do you see them changing? And do you think, around the first of the year or after the elections, everybody's got a date in their head as to when things might change or get worse. Do you have one, or do you not even delve in any of that? Well, I mean, as a professional, I try to be as ahead of the game as I possibly can by, just educating myself, therefore I can educate my clients, right?
Sure.
So, I mean, right now in our market, we have around like 4 months of inventory, right? So it's not quite a buyer's market yet.
Right.
I mean, it is, but, you know, we want to see around 6 months of inventory to really call it a buyer's market. And we'll get there.
Yep.
Right? So that's what I see. I see, you know, that's probably happening, well, for sure, it becoming a buyer's market. Yeah, and things leveling out more. But, yeah.
You know, I've been to Temecula several times. Great place. Love the area. I did a race down there about 3-4 years ago, one of those Ragnar races. Really enjoyed my time. And now, I don't know how long you've lived down there, but has the actual neighborhoods and the amount of people in the area increased? When I was down there, even then, it wasn't as busy as what I've read. Is that true?
Well, I mean, we're building up as, you know, now they're saying Menifee is becoming the new Temecula, right? Or
I see.
Marietta and then Menifee.
Right.
Yeah, so there's a lot of new builds happening up in Menifee and Winchester. So, yeah, we're moving our way up.
Yeah, no,
and there are a lot of
that.
people moving to Temecula as well. Yeah,
okay.
Absolutely.
In the listing, are you more of a listing or a buyer's agent?
I try to stay pretty even.
Okay.
I have been a little bit more of a buyer's agent this year.
I see. And how long have you been in the business, lived down there? Just letting people know so if they want a great agent down there, they know who to go to.
Yeah, absolutely. So I have been doing real estate since 2018. I'm actually originally from Minnesota.
Okay.
I came out here with the Marine Corps and got out in 2018 and have been doing real estate out here ever since.
Well, thank you for your service. We don't thank people enough, and you're certainly one of those people we need to thank. What do you see as the differences between being in the military and being in real estate?
Oh my goodness. So much, you know, I have a lot more freedom, and it's a lot more rewarding in my current business.
Yep.
I mean, you know, in certain aspects. But yeah, no, I love real estate. I love the Marine Corps. But yeah, it's a lot. And, you know, being from out of state and having served out here really helps me, right? Because, you know, as when you're beginning in real estate, you need to have that sphere of influence or people that you know. That's usually how you start your business. But
right.
I just went and started educating Marines on their VA loan, and that really, you know, it was very rewarding for me to help my brothers and sisters and educate them on, you know, the things that they're given for serving the country. You know, and that was really good for me, and that's basically how I started my business.
Well, it's interesting. There are some parallels, especially with the Marine Corps. I mean, that charge, go ahead and get it attitude really works well in real estate. It really, you have to have confidence. You also have to get out there and do a lot of the work, and certainly meeting people face to face, having that connection. All of those things really work terrifically in the real estate business.
I think absolutely in real estate, because as an entrepreneur, you need to have that.
Right.
But you know, all of the things that you learn, the drive, the motivation, the leadership, most importantly, that you get from the service, that'll help you in any avenue of life. Absolutely.
Absolutely. And when dealing with, I guess, buyers or sellers, which is what you've been doing for the past few years, do you bring up the fact that who you are, where you're from, or you just let it happen as, because some people, when they go into listing appointments or they're buyer's agent, they have a whole plan in front of them. They dictate by what's on the plan. How do you do it? Because you have a terrific way with, you know, talking as well as a great background. Are you presenting all of that, or are you just sort of letting it happen as it happens?
Yeah, you got to let it happen as it happens, and you have to really know your client. That's why you know, if you don't know them before you meet them, you need to ask them all the questions and really dig into who, not only what their needs are in real estate, but who they are as a person, so that way you can kind of, you know, you need to relate to your clients so they feel comfortable with you, and so you can better relate to them and help them.
That's an excellent answer, and I totally agree with you. The client-centric type of answer that you gave is really what real estate is all about. Yeah, you can be everything, but it's really all about the client and the relationship you have with the client. Yeah, I agree completely.
Yeah, I feel like if we go in there, making it about us, well, that's not our job,
Right. Hey, listen, we're up against it. I want you to give out your contact information for people who need a terrific agent down in your neck of the woods.
Okay, absolutely. You can reach me at 763-501-0618. That's my direct line. My email is Wiley, W-Y-L-I-E, @mogul-realestate.com. You probably Google me, too, and find all my information on there. I'd love to help anyone that needs anything.
Wiley, thanks very much, and thanks for coming on the show. I really appreciate it. We'll do it again, especially when we need a great bit of information about what's going on in your particular market.
Okay, thank you so much for having me, Jeff. I appreciate it.
Thank you very much. That's Wiley Freeman. She's from Mogul Real Estate down in Temecula. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. We're on podcasts. Daryl, do we have a record of all those podcasts? I know we're on Streaker, we're on Spreaker, we're on... Oh, we do?
Yeah, sure.
Okay, excellent.
Or if you want to keep guessing, that's okay.
No, I like the guessing.
We're on Apple Podcasts, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, and Podclips.io.
Okay, if you want additional podcasts, go to Podclips.io. They have several different categories of podcasts. If you haven't heard podcasts from a general address, this is one you can go to. You find lifestyle and sports and economics and food and health and all kinds of things that will be of interest to you at one spot. That's podclips.io. Okay, I'm Jeff Barton. This is The Mortgage Voice. Thank you very much for tuning into the show. So Darren Woodworth has been on the show many, many times talking about real estate up in the Tahoe and certainly along the corridor from, I guess, where would you say the corridor is that you service, Darren?
Well, I'm in Napa Valley, Silicon Valley, and right now I'm standing in Nevada City, right above Grass Valley, getting ready to do a walkthrough on a property I'm selling up here.
Okay, fine. For a lot of people who have never really bought real estate, they don't understand the process or what happens. So you're talking about a walkthrough. You're a real estate agent. That usually comes towards the end of the deal, right? It's about to close, and you do a little bit of a walkthrough at the end to make sure the property is in the same condition. Is that right?
Absolutely. It's called an AVID, Agent Visual Inspection Disclosure. So just making sure no one's broken in, destroyed the place before we sign docs.
Excellent. And that is, of course, part of the real estate job. A lot of people, again, don't know much about what real estate agents do. There's always a comparison to, oh, you don't work that hard, I work harder, I should make more money. And we all know that when times are good, real estate agents do very well. But could you just describe some of the activities you're involved with a buyer, for instance? Because I know it's massive. If you could just run down a little bit of a list of what you do for your buyer.
Well, right now, just got done negotiating a deal that we had to get some money from the seller because my buyer was short, so we had to do a seller credit.
Right.
So we were short about $16,000 for inspections and all this other stuff that popped up on a pest inspection and a home inspection and a roof inspection. The roof needed to be replaced.
Right.
$10,000 there. This lady doesn't have the money, so when she moves in, we're going to get a seller credit, so it's going to be at the close of escrow. So she'll have that in the bank, so that she'll be able to fix that when she, after she moves in.
Wow, that sounds. Now that you mentioned credit, that's an unusual thing for a market 6, 7, 8 months ago, but not today, right? Market has changed.
Yeah, so it's definitely changing. So. A lot of people, instead of dropping the price on the inventory, they're doing what is called just a seller for non-recurring closing costs. So they'll credit somebody $20,000 instead of dropping the price $20,000. They'll give that back to the buyer, buy down their interest rate. So, their $3,500 a month payments all of a sudden now $3,100 a month. So, saves the buyer, and the seller gets to sell the property. So, it's a change right now. I'm not seeing too much of it right now. I'm in Napa. Napa area is it's still supply and demand.
Okay.
I'm selling a house in Pismo Beach, Grover Beach, right next to Pismo Beach.
Yep.
And that property was viewed 6 times, and we had 5 offers on it. So that should close in about 2 weeks.
So in certain areas, market's still very strong. In other areas, not so much?
Yeah, so this house that I'm doing the agent visual inspection disclosure on right now,
right?
It's seen, if it's priced right, it'll get list price, and it'll actually get maybe 10 or 15 grand over. But if it's not listed properly, it's definitely going to have a challenge. Grass Valley in Nevada City, it snows here once a year. So, I mean, we're 45 minutes away from Sacramento, so it's great. It's in the redwoods, the pine trees.
Beautiful. Yep, I know the area.
There's rivers, Yuba River's right here, so it's pretty exciting up here. So this market up here, it's still, people are moving from the Bay Area. They want to get out of the rat race. All the tent cities are popping up all over California and, Sacramento, Vallejo, all those areas. So a lot of people are selling.
Hey, you talked about pricing and pricing the property. How do you go about it in the market that's changing, pricing a property? Do you use general statistics, a nearby neighbor? Do you try to follow a trend so that you're not chasing the market later on if you have to drop price?
Well, it depends. If it has a new roof, new kitchen, all that stuff. The appraisal just came in at $688 on this Grover Beach property. It's a 2-bedroom, 1-bath.
Right.
But it needs a new roof, so we should have put the seller credit in before the appraisal went out and said, hey, we want to do instead of $688, we want to do $700, and then give the $12,000 back to the buyer. But it's too late. The appraisal has already come out.
Right.
They appraised it at $688, so now the seller can't give back that extra money. So it would have been nice to get a $700,000 appraisal and then give the buyer back $12,000. So
now you've obviously followed the rising mortgage rates. They rose again today. I think they were over 6.5%. How are your buyers handling that cost, that end of the cost?
Yeah, that's a great question. And if you could afford it, it's a great time, because I'll tell you what, when the interest rates come down and you're paying, $3,500 a month, and you go to drop your interest rate from 6.5% down to 3%,
right?
You're going to knock off, $2,000, $1,500. So if you could manage to get in right now, great time to buy. That's what I tell. If you're renting right now, this property that we're selling in Grover Beach, it's got a tenant in the back that pays $1,100, and it's got a tenant in front that pays $2,500. And the lady that's buying it, she's going to live in the front unit, and she's going to collect $1,100 in the back unit, and her mortgage is going to be, $1,700.
Right, and that's at 6.5%. That's pretty good.
Yeah, she's paying $2,500 in Paso Robles right now, so she wants to be over by the coast. So it's a win-win for her. I mean, it's a 6.5% interest rate, but
So you mentioned
the numbers work.
Yeah, you mentioned a little bit that you think that the rates might go back down from where they are now. Do you have a crystal ball out there?
No, it's just I've been in the real estate business for 20 years. I remember there was 15% interest rates, and I remember I did bank-owned properties for 10 years when the bank would say, we own your property, and I have to go knock on the door and say, hey, I got $2,500 to offer you cash for keys. Do you want to leave, or do you want me to get the sheriff? So those people, if they would have stuck and stayed and paid, they lived in it for a year without payment. But if they could have stuck it out somehow, those properties doubled. I'm looking at properties that I bank owned 10 years ago in San Jose.
Right.
Those properties are $1.5 million right now, and they were $400,000 when I threw them out.
Unbelievable. That's unbelievable.
Yes, it's crazy.
Yeah, that's also California real estate. It really is a roller coaster here. It just depends.
I just got back from Tennessee. I just bought a property out there for $15,000. I spent 2.5 months out there remodeling it, and it'll sell for $175. So the market's crazy.
Wow.
Pretty much in a lot of places, even in Tennessee.
Whereabouts in Tennessee? I had family that lived in Jackson.
Oh, I'm half an hour from there, Selmer, Tennessee, and Bethel Springs.
Oh, yeah, it's a nice part. I like that part of the country. I spent some time there several years ago.
Right on the walking tall Buford-Pusser Highway.
Very nice. Hey, Darren, you know what? We're coming up against it. If you want to shout out a way by which people can get a hold of you, so if they need a terrific agent, loan officer out in that area, they can.
Awesome, thank you. My name Darren Woodworth, 408-425-7845.
Excellent. And you are available all the time, and you're probably ready and raring to go, and appreciate you coming on the show.
24/7.
Thanks. Take a night off once in a while, though, will you? Thanks, Darren. Thank you very much. That's Darren Woodworth from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show, tuning in and looking to learn more about what's happening in the real estate market. That's what the show is all about. We talk mortgages, of course. Mortgage interest rates today, 30-year fixed rate is over 6.5%. If you shop around, if you try to weasel and connive, maybe you can get something in the low sixes. But guess what? Those days of low interest rates are gone, long gone. How's it affecting you? How's it affecting your decisions? Are sellers giving up a little bit more in order to get people in the property? Is it still buyer's market, or is it, a seller's market, or is it turned to a buyer's market? All of these things are extremely important. And if you want to see this show, go to YouTube. Jeff Barton, the Mortgage Voice on YouTube. You can see this show. Click on that you like what you see. Click on that you want to join so that you get updates as to what we're doing each and every week. Thank you very much. And again, this is Jeff Barton, and I am the Mortgage Voice. I'm the Mortgage. Anyway, joining us once again is Brenda Scott, who comes from Malibu Funding in Southern California. Brenda, how are you?
I am terrific, Jeff. How are you?
I'm okay. Thank you very much. When markets change, it makes people nervous because they're just not used to it. Even when COVID was around, the real estate and mortgage industry were great. So we could ignore, at least people in the business, and certainly anybody who was buying could ignore what COVID was because they were getting a great deal on the mortgage. How is it today?
Well, I would say it's worse or the same, but I do want to add that I think it's still a good time to buy, and I do think it has shifted to a buyer's market. I think interest rates, they are higher than what we've been seeing these last couple of years. But lenders are being so creative now to get, new loans, new purchases, or refinance in. They're doing interest only. They're doing 3-1, 2-1 buy downs where you start off at a lower rate and it caps out in 2 or 3 years. It's still a good market. It just the sellers now just have to give up a little bit more money, but it's still a good market. If you've been around for years, like we have, it's a circle, and it all works out. You might buy with the interest rate high, but hey, you might get into that neighborhood that you always wanted to get in at a lower price than you did, 6 months ago.
Well, that's interesting that you say that because there is an offset. If the interest rates are up, less buyers, price gets lowered. That's the equation, right?
That is it.
And
that is it.
And representing, I guess, mostly buyers, right, or people who need loans. They're not doing refis right now, are they?
Absolutely, just a little, not as much. If they need the cash,
right,
then they have to refinance. It just depends. If they need that cash for college education,
right,
home improvement, if they miss that market, it's still a good market. I mean, you got FHA and VA now that are doing, 40 years, and some are doing interest only at a 2-1 buy down. It's still a good market. I still say don't not buy and don't not inquire about refinancing.
Now, the difference between this buy down, either the 2-1 or the 3-1, whatever, and an adjustable rate is that the buy down is over and that's it. It doesn't adjust anymore, but an adjustable rate may adjust up to whatever the cap is of a percentage each year, half point, whatever it is. Is that right?
Absolutely. And you're correct. Now, there's also that other program that, it's been out for a little while, that DSCR.
Right.
That's an awesome program. I mean, you can buy a non-owner-occupied property with 20% down with this low income. We don't even need your tax returns or your bank statement, as long as that property debt services itself. Still a good market. I say still a good market.
Now, interesting that you say that. Renters across the country are complaining not only that the rents have gone through the roof, but also that there aren't a lot of them. Are you seeing any indication that people are buying more properties to rent out than you were, let's say, 6 months ago?
Oh, yes.
Right.
Yes. I am seeing where property, people are getting those funds together and they're buying in neighborhoods where, sometimes these rents are going from $35,000 to $4,000 a month, and people are paying that for rent.
Right. Yeah, it's amazing. That's a big number. In any neighborhood, $3,500, $4,000 is still a lot of money. Huh.
Hey, if you can pay that to rent, you can pay that to buy.
That's right. So what's missing? Down payment? Credit score?
Down payment. But, you can get into a house as low as a 3% down payment. And you can buy out the MI and you still save money.
That's interesting. A lot of great different choices. I was going to ask you about the different choices in this particular market, creativity-wise. You talked about the 40-year. You talked about the VA. You talked about FHA. You talked about the 3% down. What are some of and the DSCR, what are some of the other programs that you can think of that might benefit someone in this market?
12 months bank statement, long as your FICO score is you got to have a pretty decent FICO score. And I'm talking about when I say that, you can do bank statements with a FICO score at 690. That's still a good deal.
Yeah, that's a good deal.
Your rate might be a little bit higher, but you can also do bank statements with a 720 or 740. You might be able to still get a 6.75 or 7%. But if you do that interest only for 40 years, it still comes out to a pretty decent monthly payment.
Now, this 40-year loan, now, it is a new product that I've not really heard of in the past. Well, it's been around, let's say, for 6 months that I've heard of it. Have you heard of it before? And the advantages, obviously, are lower payment. I mean, that's what everybody's going for, right, the lower payment.
Absolutely.
Right.
It started coming out when interest rates started creeping up. Lenders said, hey, we got to do something to get this market, moving or continue to have it grow. So what's the difference in a 30 years and a 40 years? We never pay a mortgage off anyway.
Right.
I mean, our parents may have, but in my lifetime, I would never pay a mortgage off.
Right. No, I understand that. And I think most people are in and out of a mortgage every 6-7 years, right? I mean, it doesn't...
Every 6-7 years. Absolutely. 6-7 years, you're going to sell, and you're going to go in, you're going to buy low, and then when you get ready to sell in, 3 to 5 years, you're going to sell high. So you still make money.
Now,
whatever money you're going to lose on this side, you'll get it on the back end. That's how I look at it.
Well, that is the real estate story, right? I mean, obviously, buying right and selling right is the only way to make money. And certainly in the interim, if you can lower your payment, that's why that 40-year is good. That's why the DSCR is good, because you're getting in on a payment that either is afforded by the rent or is cheaper because it's a longer term.
Absolutely. And in 2 years, 3 years, it's a cycle that we go in. Now you can turn around and you can refinance that. Most lenders are, giving more discounts, obviously when it comes to that time, but it's still a good time. I say do it. I say give me a call. And I'm also, oh my God, it's on the tip of my tongue. Reverse mortgages.
Yep.
62 and over, you can do a reverse mortgage and not have any mortgage payment. None.
Now, it's interesting. The reverse mortgage product itself brings me to the topic that I want to talk about, whether it's a HELOC or a second or a refinance, and certainly the reverse would also qualify in this area. You have equity in your home, and you want to take advantage of it. What's the best way to do it, or does it depend on the client?
Oh, I say the best way to do it, first of all, is to call me at Malibu Funding. But, yeah, you just call, you can get your quote. Yep. You can get a quote that tells you, you can do your reverse mortgage and you can get your cash out. Now, they put in a limit. They got a cap on it, so you might be able to get, you'll get a certain amount of money up front. Like I have one, and she wanted $80,000 out. Well, she can get the $80,000, but she's going to get a percentage of it up front, and in 12 months, she'll have access to the remaining of that $80,000. But she gets $40,000 up front. You don't pay no payments on it.
That's excellent. Listen, Brenda, we're up against it. Unbelievable. 10 minutes went by very quick. Thanks for the info.
I know.
Tell people how they get in touch with you.
Call me, 562-500-2400. It doesn't cost it. Give me a call and find out if we can work out the best deal that works for you.
Excellent. And you're in Southern California, is that right?
I am in Southern California, absolutely.
Excellent.
I'm waiting on your call.
Thanks very much, Brenda. I really appreciate you doing this once again. Great call.
Not a problem. Have a good day. Love you guys. Be safe.
Yeah, you too. That's Brenda Scott from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. Each week we come to you from a number of different radio stations, KCAA, KMET in Southern California, K-Tahoe, KTHO up in Tahoe, California, and we're at K-Ship, KSHP 1400 AM in Las Vegas, Nevada, as well as K-Mine, KMIN, K-Mine Country down in Albuquerque. It's a eclectic group of stations that we have been talking to about their real estate, and you know what? It represents a lot of what's going on in the U.S. in terms of housing prices. Some of these markets, especially Las Vegas and Albuquerque, have been the last 2 years, some of the hottest in the country. They've seen their particular prices really escalate way over what the national average is. And that's why we go to them now to talk about it, is because those particular markets are the ones that are actually falling fastest, quickest. Now, what do I mean by that? I mean, yes, we still have positive year over year. Yes, that's true. But the number of units on the market has not risen. The prices that they're getting have really fallen below what list price is. And what do I mean by that? When you go out and list your house and you say, okay, my house is worth $100,000, and you sell that house for $98,000, you have sold below listing price. Well, that's happened in 98 out of 140 markets in the U.S. in August. Now, as a result of those particular numbers, we say, hey, real estate is in trouble. And it's in trouble because of the fact that mortgage interest rates are up. So the buyers are hesitant about dropping money on something that they think, okay, if we're going to be in a recession, we know that prices are going to fall. I just quoted 98 out of 130 or 140 markets, it's already selling below list price. Granted, it's still 7% year over year, greater than it was last year, but how quickly and how soon is that number going to reverse itself, i.e. you're 7% below? Now, there are estimates in the U.S., in the markets, a lot of the markets, that say that we're going to drop below what our current price level is, i.e. what you could buy today is going to be worth less tomorrow in 5% to 20% of most of the markets in the country. There are pockets that are good, there are pockets that are worse. But if that's true, you are seeing currently a lot less buyers in the market, who are offering full price. They're looking for deals. And what is a deal if you're afraid that the market is going to go below 5%, 10%? It means that you're going to come in with contingencies on that offer, i.e., Not the way it has been the last 2 years, where you got to come in with no contingencies and all cash. By the way, we still have 25% of the properties out there being bought as cash. That's how much cash is still in the marketplace. What they call bleeding the excess or draining the excess of cash out of the market is what the Fed is trying to do in order to stop inflation. Now, we went through that in the previous section, but when you're raising interest rates, and the Fed is raising interest rates, which will, again, affect not the mortgage rates, but it will affect your car loan, it will affect your credit card, it will affect short-term loans, it does affect the way that your lender will price loans based on not only the 10-year, but what the Fed is doing, because they too have to have a margin in there in case the mortgage interest rates rise above what exactly they're selling you the mortgage for. That's why a couple of those banks last month, Sprout Mortgage and First Guarantee, went out of business because they didn't measure the spread right, and they got caught holding hundreds of millions of dollars worth of loans that nobody wanted to buy, i.e., I'm out. A lot of other companies are trying to price that in, so you have to make sure that when you do that, your margin, your spread, whatever you want to call it, is correctly priced. So all this being what it is, what does it mean to you as the borrower who is out there trying to figure out if you're going to pay what the seller is asking? That could happen quickly, i.e., 80% of the market goes, we don't want to buy anymore, and not at this price, because we're worried about the recession, we're worried about prices falling, even if it's 5% to 20%. This is what the problem is in the real estate section right now, in the real estate market. As I said, there are fewer new listings. Median price of home is $389,500 in August. It's up 7.7%, as I said, but down second month in a row. Meaning that, as I said, 22% 2-3 months ago, last month it was 11%, now it's 7%. What's it going to be in September? Better yet, what's it going to be in December when people are worried about getting laid off, when people are worried about their jobs, they're worrying about being able to afford a down payment, let alone the interest rate that's probably going to be closer to 7 than 6. Okay, there's a lot going on in the real estate business, a lot going on in the real estate sector, and for you out there as the borrower, the solutions that you need to get into a market. You want to make sure that you're buying right. You want to make sure that you're shopping around for lender, and you want to make sure that the property that you're buying, you're in for the long haul. The fix and flip market, not doing so well right now because you can't buy low enough to make it worth your while if buyers are worried about recession, i.e. you can't up the price by 10, 15%. That's just not happening right now. Okay, let's see. More homes sold below list in August than all of COVID combined. So COVID, 2.5 years, 1 month. In the COVID, you have properties that are selling below list price. 2.5 years worth all combined, that hasn't happened. That's what's going on in the real estate market, and that's what's going on in terms of what you have to consider when you're out there to buy. Okay, so we've talked on this show about appraisals, and we've talked about the discrimination in the appraisal area. I am not a political person. I have opinions, but mostly it has to do with being fair and straight down the middle, right? So we told you a couple of months ago about a black couple in a neighborhood, brought in an appraiser. They wanted to do a refi. The appraisal came in really low. And the homeowner said, well, wait a minute, this isn't right. So they ordered another appraisal, removed any picture or indication of the color of the person that lived there, put in pictures of white families, and had a white person answer the door when the appraisal came. The appraisal came in hundreds of thousands of dollars more than it was. There's obviously a lawsuit going for discrimination. But just to show you, on the flip side, how it works if you're super wealthy. I don't know if anybody's been following this ex-president and New York State issue when it came to overvaluation of properties. He had a property in New York, penthouse. This is the ex-president Donald Trump, that he valued. It was 5 times. What was it? 5 times? It was $750,000, and he had it at, I don't know, 4.5, 5 million.
Yeah, 5 times the square footage.
5.
It really is.
Oh, 5 times the square footage. Right. He had it down at 11,000 when it was 3,000 or something like that. I said, come on, man. And you know what? The banks bought it. They're as much at fault here as anybody else. I mean, everybody gets away with what they can get away with. But in certain circles, if you are who you are, you get away with a lot more. And certainly a billionaire white guy from New York got away with a lot more than that couple I told you about, who were just struggling to take some money out for a refi for a property that was worth way more than the appraisal said it was. Just saying. Okay? Anyway, let's move on. Home sales declined 7 months in a row. Sellers and buyers. Okay. So if you're in the market right now, what do you do and what are you looking for? If you're a seller, you know that there's less competition. You know it. Why? Because you're getting less offers. You don't have multiple offers. You don't have people fighting tooth and nail to get what you're selling. Therefore, what do you have to do? You have to accept contracts with contingencies, i.e., an appraisal contingency, like we're just talking about. You have to have somebody say it's worth what you say it is. And also, you have to negotiate if it isn't. If the appraisal comes in less than the contract price, have you negotiated that already? Used to be, buyer had to make up the difference. It's not that way anymore. If you want to sell that property, you have to agree to negotiate or pre-negotiate whatever it is that you can negotiate in terms of the deal of the price of the property according to the appraisal. That's a big deal. Number two, you have to reset expectations. As a seller, you have to know going in that you are trying to get the highest, best price and that you're probably not going to now get overbid on your property. So you have to set expectations by saying, okay, this is what I want, this is what I'll get. And usually what I'll get is a lower number. And as I explained earlier in the statistics, 98 out of 130 markets are accepting less. And then as the last thing, more give and take, more negotiations. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for listening to the show, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.
Legacy 1050 AM, Southern California.